So the growth in this business is phenomenal. The profitability potential in this business is also phenomenal. We're talking about over $4 trillion of potential net profit on a fleet of 285 million robots. And then we get to the Robotaxi business. Again, the numbers in gray come from the auto business in terms of the EVs delivered. And the question is then, out of those cumulative EVs sold, the numbers in pink represent the autonomous fleet size. So how large will the fleet be at different points in time? We had higher numbers than this when we first did this about 6 months ago. I've backed off the numbers for 2025, backed off for 2026, and so on. But at some point, this will ramp aggressively to fairly large numbers. And you can see that by 2035, we get to a $21 trillion business valuation just on Robotaxi. Now, I applied a PE there of 50. So if you want to quibble with that and say it should only be 25, then it's a 10 or $11 trillion valuation. That's fine. But this is a very profitable business, and at this point, still growing nicely. Even though you can see there in the last couple of years, I've only got, I guess you can see that the autonomous fleet size has gone from about 20 million vehicles in 2033 up to about 27, 28 million by 2035. So still growing quite nicely at that point. Okay, and then the business that just eclipses them all is Optimus.
Mm. Oh.
Okay. And so I've got the production of humanoid robots there in that one column. So let's say last year they produced 10. Let's say this year they produced 2,000.
Mm-hmm.
And then ramping to 50, 500, 2 million, 6 million, 12 million, and on up to 100 million by 2035. Okay, so the growth in this business is phenomenal. The profitability potential in this business is also phenomenal. We're talking about over $4 trillion of potential net profit on a fleet of 285 million robots.
That's isn't that NVIDIA's valuation right now, 4 trillion?
There you go.
And the profit itself is 4 trillion.
Yeah.
Yeah.
Okay. So in a minute we'll discount this and say, okay, my numbers are pie in the sky. That's fine. I happen to think these are ultimately pretty conservative. Maybe it doesn't happen quite as quickly as this, but Elon has talked about aggressively ramping this business at some point. And so just to drill down on that a little bit, let's compare Optimus deployments with the numbers that we have for auto production and auto deliveries on the next page. So when you first look at this, you see the bot deployments there in blue is massively, out accelerating the auto delivery number. And you say, oh my gosh, this seems crazy. How can they produce 100 million robots when they're only producing, let's say, 14 million vehicles a year? Well, the reason is that a robot is probably about 1/30th of the weight of a car. So if you go to the next page, let's say...
Wait. Yeah, before we go there, was it 14, how many million per year for auto delivery here? 14
about
million?
14 million, I think was the number that we have.
Yeah, that's not crazy because Toyota, today, don't they make around 10, 12 million per year already?
Yeah. And in an autonomous world, there'll be a lot of need for cybercabs. So that kind of production is not crazy. Maybe they're only going to be selling 1 million vehicles a year, but they could be deploying 13 million into their fleet. Okay, so what I've done here now is say, okay, bots are smaller in weight. Therefore, you should be able to produce, let's say, 20 bots for every car that you make.
Yeah.
So when you adjust that, when you take the bot numbers and divide them by 20, suddenly the bot production doesn't seem so crazy relative to the number of vehicles that Tesla's able to make, right? Remember, Tesla is very proficient at manufacturing things at scale.
Mm-hmm.
So if we adjust the bots for less complexity, less size, et cetera, it's just easier to move bots around a factory than big, heavy cars. They should be able to make a lot more of them. So 100 million bots, it doesn't seem crazy to me by 2035.
Not at all.
And Elon has made many statements about this as well. He plans to ramp this up in a massive way. Okay. So let's take all that together now. We've just looked very quickly at all the different business lines. Let's look at the sum of the parts valuation. So what we have here is the valuation that comes from each of the models. So you're pointing there to autos. By 2035, we get to that 1.3 trillion in valuation.
Mm-hmm.
Okay, and then we've got semi next to it, 100 billion. We've got another 1.3 from the energy storage business. Services and other 150. And then we've got Robotaxi at about 21 trillion. We've got Optimus at about 214 trillion. We've got AutoBidder at about 1 trillion. And we've got AI inference we didn't even talk about, but there's potential for that. Small, let's call it 18 trillion. So some of the parts valuation for Tesla in 2035 is a mere $238 trillion. Okay.
238 trillion is crazy number because we're basically the valuation of Tesla today is 1 trillion. 1 trillion.
Yeah, and that shows there
growth.
in the year sort of 2026 at 1.1 trillion. This is some of the parts there. Yeah.
1.3. What? 1.1. What?
Sorry, if you go up to the table to year 2025 or 2026, you can see the sum of the parts valuation numbers for where we are today.
Yeah.
2025 about 700 billion
Yeah.
and 1.1 trillion in 2026.
Gotcha.
Yeah.
And it's going to be 238 times. And almost all of this is because of the bot and Robotaxi a little bit more. But that's basically the key thing. The other thing I was going to mention is that this also assumes that these are the only businesses that Tesla will do.
That's right.
Once you start making bots, you can then start creating any product at this point. If you wanted to create, I don't know, Frisbees, whatever.
Yeah, and by the way, I didn't mention this when we went through the Robotaxi and Optimus models, but my assumption is for $41 of profit per day per Robotaxi and per bot. $41 a day of profit.
That's it. Yeah, that's going to be way more than that. Yep. Okay.
Now, maybe in future years it'll be less than that, but 2035, I'm not convinced it's going to be way less than that. Mm-hmm. So as crazy as these numbers may look, they're actually built up by pretty conservative assumptions. And having 285 million bots in the world by 2035 again is not a stretch when we look at past success with things like the iPhone, other products. They ramp pretty quickly. But the reason at the top that we've got the probability numbers, and a little bit later we'll adjust these probability numbers, and so you can see what impact that has on these numbers. Yeah. Yeah. But the purpose of this was just to show the sum of the parts, and if you add those together of the existing businesses and the ones that we know that are coming, we get to a valuation, let's say by 2030 of about $48 billion, and a valuation by 2035 of about 48 trillion, and $240 trillion by 2035, just as sum of the parts valuation. Okay. So now what we can do is just take a look at the whole company. Forget the parts. Let's look at the whole company as one entity. So in the next page, we take the profits from each of the different business lines, sum them all up, and apply just a company level PE to those profits. So for example, in 2030, we've got profits of about 538 billion. It's the total profit column there in blue right there. Yep. And so if we apply a PE ratio to that, at that point in time, let's say a 75, because you can see that profit is growing at 75% or more per year, and it has done so for 4 years by that point. So a PE of 75 at that point in time doesn't seem crazy. We get to a valuation of about 40 trillion. Now, if you recall from the previous page, the valuation in 2030 was 48 trillion using a sum of the parts. And this method gets us to about 40 trillion, just applying a company-wide PE. So the results are very similar in terms of, the actual result of the valuation.
Which is 40 times what the share price should be today.
Yeah.
40 times in 5 years.
Yeah. And that share price, by the way, a lot of people like to think of it in share prices, is the very far right column in pink, future share price. That's about 10,000 a share.
Yeah, that thing, 10,000 a share, people just gloss over. As soon as they hear somebody say Tesla stock going to be 10,000 a share, they just, bullshit.
Yeah, and by the way, that share price takes into account dilution of the shares as well. So market cap doesn't do that. But as a shareholder, you care about how many other shares are going to be issued along the way and what your share of the profits is going to be. So that share price number actually takes that into account. And then by 2035, we get to a valuation of 221 trillion. And if you recall, the sum of the parts valuation was about 240. So we're in the ballpark there again. And that's using a company-wide PE of 45. And if you look at the growth rates there in that annual profit growth column in white, the company's still growing 45, 50% a year. And it has done so for a few years up to that point. So a PE of 45 or 50 at that point in time would be well warranted. Cut it in half, right? You still are over $100 trillion valuation, right? The numbers could absolutely be staggering if this company can execute on these plans. And you can see there at the bottom, the very bottom, very small numbers, percent of 2035 total, Optimus accounts for about 87% of the company's profit at that point.
Mm-hmm.
The future of this company depends on Optimus, right? The auto business is about less than 2%. Energy storage, 1.5% of the profit. Robotaxi, 8 to 9%. And Optimus, basically the rest. And just to note, I don't know really of anybody on Wall Street that's including Optimus in their models at this point. Even ARK Invest. They've talked about it, but it's not in their numbers. The next page is just a visual of that future share price. Again, a lot of people always ask, what's the share price going to be at certain points in time? Well, if you take these model numbers, if you believed in the inputs of the model, then these would be the outputs for the potential share price in the future. Now, these aren't share prices discounted to the present. That's just in 2030, the model spits out a share price of about $10,000 a share. Again, adjusting for share dilution of share issuance to employees for stock-based compensation and things like that. Just a visual on that. And then just to sort of show people sort of what this looks like in terms of profit. If you go to the next page.
I want to stay here for a second.
Okay.
Yeah. So we are here in 2025, $392 per share, which is around.
We're less than that right now, but the model based on this valuation method gets us to about 400.
Yeah, which we jumped up to 420. It's going to be variable around that area. We can easily, some people believe, jump up to 400 by the end of this year. Yeah,
definitely.
Or fall. I mean, anything can happen. It's very sensitive at this point still. Then you're saying that by next year, the share price could be around 500 plus. So that's it's a growth. But then this is where 2027, 2028. Now we're talking, from let's say $300 to 1,500. That's a 5x. That could be a 5x by 2027.
Visually, what do the net profits look like that support this?
Okay.
So what I did in the model was built it up year by year from now until 2035. And then I assumed, I believe it was a 5% growth rate in the earnings beyond 2035, right? Which I think is pretty modest. I think the company will be able to grow a lot faster after 2035 than 5%, but that was my assumption, right? And I looked at a lifetime of this company of 60 years. We saw in our previous work that we did about 6 months ago that the sweet spot for valuing a company is like 40 to 60 years. To do 80 or 100 years, it's unnecessary. The discounted value of those future earnings is kind of meaningless. And actually, if you go to the next page, this is share buybacks. The company now has about 3.6, I think, billion shares outstanding. And by 2035, we're well over 4 billion. And over the 60-year time period for this valuation model, we get over 8 billion shares outstanding. This assumes no share buybacks. Okay, so we're factoring in share dilution is the message that I'm trying to say here in this model. The employees of the company, Elon, is going to get an increasing share of the company over time as they're compensated with stock. So as a shareholder, we're getting diluted to the tune of about 2.25% per year on average. And then this is the future earnings per share then. So we're taking the net profit number, dividing it by the number of shares, and you can see we're expecting a rapid increase from now to 2035, and then you can see that 5% kicking in, just kind of a flat line increase.
Mm-hmm. Where are we today? Earnings per share?
The first bar there, 2025.
About $5, like that?
Something like maybe 6.
Mm-hmm. And so this is interesting because the people lots of people, investors, they don't like to bet on companies on future potential businesses that might come. They want to bet on it once. And you pointed out another show that NVIDIA stock skyrocketed after they did quarter after quarter earnings growth. Each quarter, they share their earnings per share. And then the next quarter, it was higher and it kept going higher and higher. That's when the stock skyrocketed because they go, you're proving it. You're actually proving it that you're actually getting cash in. And so this is what's interesting is that once you see these leaps in actual earnings, it can actually happen by 2026. 2027 is the actual year where you go boom, then you go boom, right? 2028. And this is why some people are saying that regardless of those who the last 5 years, stock has been flat because there's been no earnings growth. That's going to change. That's about to change.